got it.
Hello, everyone, and welcome to your daily stock report brought to you by QualityStocks.net, where performance is tracked daily. I'm Kathy Rankin, and for Wednesday, January 31st, we're bringing you the latest news from around the markets, as well as the top movers to look out for today. And what an interesting day it was in our headline news, considering the breadth of disappointments on the earning front and soaring prices across the energy complex, ahead of a plethora of economic data that also includes an update on monetary policy. Stocks actually held up rather well Tuesday. As evidenced by the S&P 500 turning in a better performance than both the Dow and NASDAQ, it's not surprising to see just how big of an impact renewed enthusiasm for beaten-down oil stocks had on the day's action. All of the energy sector's 33 components closed sharply higher, led by a 1.6% gain in shares of the broader market's most heavily weighted name, ExxonMobil. Explorers, among the biggest beneficiaries of soaring natural gas prices, was the day's best-performing S&P industry group. Crude for March deliveries surged 5.4%, the biggest one-day move since Hurricane Katrina, to close near $57 a barrel. The rally was sparked by reports of below-normal temperatures and news that Saudi Arabia will reduce daily production by another 158,000 barrels beginning Thursday. It is also worth noting that even as policymakers said at their last meeting that inflation pressures seem likely to moderate over time, reflecting reduced impetus from energy prices, the front-month crude contract closed that day near $61 per barrel. Since that's still 7% higher than where it closed today, it didn't appear investors were too concerned about the Fed tweaking that portion of tomorrow's closely watched policy directive. While the market was pricing in the likelihood of a Fed easing in early 2007, there's also an argument that such a rate cut may jeopardize the Fed's credibility and subsequently renew recession worries. Thus, since the Fed needs to talk tough on inflation fighting, it's a general belief that tomorrow's policy statement will connote a continued bias towards tightening. In our small cap news today, CO2 tech company's tech president announced today the company will join Boeing's global commitment to support anti-global warming activities and other environmental efforts. Boeing's interest has been captured by CO2 Tech's new solution to reduce polluting gases emitted from airplanes at high altitudes. CO2 Tech's new dispersion solution for high-altitude gaseous aircraft emissions will utilize CO2's unique mechanism that will compress and decompose the destructive gases before emission through a dedicated system. CO2 Tech will proceed in the development of its innovative solution, which will be presented to Boeing upon completion of its development. Boeing seeks becoming the first aircraft manufacturer to implement the new anti-global warming system and successfully reduce air pollution from high-altitude emissions. Previously at 91 cents, CO2 Tech closed yesterday up 71% at $1.56 per share with over 11 million shares traded. Rancher Energy Corporation announced today they have been rated speculative buy with a target price of $7.39 by Beacon Equity Senior Research Analyst Chris Goldcross, CFA. Rancher Energy has successfully acquired major land positions in 5 oil and gas fields with proven past production and significant potential for undeveloped remaining reserves. Rancher Energy Corporation is an oil and gas exploration and development company working to develop 5 significant assets in the Rocky Mountain region of the U.S. Leading-edge hydrocarbon recovery techniques like CO2 injection, directional drilling, and 3D seismic data have made it possible to extract the proven in-place oil and natural gas reserves that remain behind in mature fields, and high oil and gas prices plus rising demand have made it profitable. Rancher Energy Corporation, previously at $2.56 a share, closed yesterday up 7% at $2.58, with a little less than 500,000 shares traded. U.S. Energy Initiatives Corporation today announced an agreement in principle with BASF Technologies to grant exclusivity for portions of the domestic U.S. for sales of the company's patent dual-fuel diesel to natural gas technology. The deal, which will allow USEI to join its hybrid system together with BASF's Smart Muffler technology in a program to achieve a California Air Resource Board Tier 3 certification as an emission control device. U.S. Energy Initiatives Corporation commercializes a patent dual-fuel diesel to natural gas conversion technology through the automotive aftermarket and through certain original equipment manufacturers. They also engage in the manufacture and marketing of retrofit systems for the conversion of gasoline and diesel engines, stationary or vehicular, to non-petroleum-based fuels such as compressed natural gas and liquefied natural gas. Previously at 7 cents, U.S. Energy Initiatives Corporation closed yesterday up a healthy 42% at 10 cents with over 8 million shares traded. And that's it for the newsmakers. Be sure to join us every market day for the latest commentary on small cap to large cap and everything in between, brought to you by QualityStocks.net. Also, be sure to watch for the Quality Stocks daily newsletter, available each trading day through QualityStocks.net. Thanks for tuning in. I'm Kathy Rankin. Have a great day, and we'll see you again on the Daily Report tomorrow.
This transmission is coming to you. You've got it.